Hi everybody, I'm Jay-Z and this big lug is Alex, and welcome to the season finale of the Robinhood 3K Challenge as we get ready to see Mikey YOLO his gains for our sadistic entertainment in a classic showdown between Bears and Bulls. And it has been quite the season already, hasn't it, Alex?
That's right, Jay-Z. It does seem like a pretty dramatic move to put it all on the line, but here it is. Let's see how much chaos Mikey can weather.
Thank you, gentlemen. Mikey Millions here, and I am proud to finally bring you the Season 1 finale of the Robinhood 3K Challenge. I promised you all an episode where we really lay pipe, YOLOing the hard-fought gains over the last few months to strive for something larger than life. Will I go full Scrooge McDuck, diving into my mountain of coins, or will the market drag me through the mud and dump me off in Ramenistan? Now, if you're a meme connoisseur and would prefer a graphical depiction of the finale's events, I'm linking a video that I intended to include here, but YouTube didn't like it, something about copyright. So here's the link to the unlisted video instead. For those who want the full Monty, I know you're ready to see this episode kick off, so without any further ado, let's hit the gas. We're starting off with an account value of about $3,680 to play with. 100 of this is leftovers from the last episode, when I got a free share of Microsoft from a referral. I YOLO'd about $70 of it already, but then I polled the crowd about what I should do with the rest. And what did you all tell me? YOLO the remainder like a true degenerate. Big fucking surprise. So here we go. Our first move is to take the rest of this free money and throw down. It's March 5th and we're seeing some pretty serious market volatility here. This might be the start of something bigger with this whole coronavirus mess, but it's hard to tell at this point. It was the start of something bigger. In any case, we're seeing a very bouncy market this week, and I remember seeing something like this happening at the beginning of the 2008 crash, which was right before I started investing. I remember a week straight when the Dow went down 500 on Monday, up 500 on Tuesday, down 500 on Wednesday, and so on throughout the week. And I remember thinking, man, if I ever see this again, I'm gonna swap between long and short each day to ride this gravy train to Tendytown and dip my nuggets. 12 years later, guess what we're seeing? So far this week, stocks have done exactly that. Here's swoop, dupe, and then here's the big swoop that we're gonna have tomorrow. And before the market closes today, I'm YOLOing this $100 on a SPY call with 1 day to expiration. I know this isn't real serious DD, but the market basically makes no sense right now anyway, so I'm not going to read Gilded DD just to see SPY ignore it. We're buying an FD. Let's dump $108 into this 309 call. And within just a few seconds here, my order is filled and my heart rate is hitting the 100 beats per minute level. Tonight, I'm sleeping in the bull barn. I woke up several times last night with alternating dreams of SPY being up and down 10%, so I wasn't really sure what I'd be getting this morning. And, well, it turns out the market decided that 2008 was old news, and the up-down cycle went bust on Friday morning. SPY finished slightly below my 309 strike, so that's just a free share of Microsoft thrown out the window. But, you know, I've spent $100 on dumber shit before, so it's alright. Coming off that L, I decided to do some more serious analysis than charts on Microsoft Paint before getting into my next play. It's still March 6th. I've got this YOLO loss right in front of me, but I've got two bearish plays on the table that I think are going to turn this around. Deutsche Bank and EWI, the iShares Italy ETF. Deutsche Bank is basically what you'd get if the Yakuza opened a bank in Europe as a front to launder money, and then the Italian mafia accidentally bought it while trying to launder money they got by extorting politicians. In other words, for such a large bank, it's basically a WeWork version of the cartel in a fancy suit. As evidence, I point to the bank's Wikipedia page, where its list of scandals is longer than its history section. This bank is pretty much always in trouble. Some recent problems have included chilling with Jeffrey Epstein, being part of the Australian cartel, which I didn't even know was a thing, also money laundering, SEC violations, and stealing money from a Malaysian development fund, for which the Deutsche Bank country manager from Malaysia, named Youssef Anar Yaqub, is literally on the run from Interpol. You know your company has hit rock bottom when your managers are hiding from Interpol. Fundamentally, this bank is ridden with scandal, revenues have dropped for several years in a row, and I think this will eventually become the next Lehman Brothers and set off a real mess in Europe. I expect that people will see this pending recession in Europe as reason to dump toxic stocks, and Deutsche Bank will be among those being sold off. On the technical end, RSI is dropping rapidly and is below 30, so that's definitely bearish. The price action looks like a roller coaster, and although we might see some support around this $7 mark, I don't think we've got much support until then, and we've got another 11% drop before we hit that point. And the MACD is showing a lot of selling pressure. Very clearly, this is a 10 out of 10 bearish play, just short shares. Or if you're a real player, buy out of the money puts, and that's exactly what I'm going to do here. I'm buying a put at the $7.50 strike expiring next week for $38, and I'm going to close this thing when Deutsche Bank hits $7. That ought to bring some nice cheddar. Within 3 days, Deutsche Bank got nailed even harder than I anticipated, along with the rest of the market. Here we are at 9:31 a.m., and already DB has crashed right through that $7 support and is hovering at around $6.63. I'm up 500%. Unfortunately, that's only a $200 gain, but if some fuckboy was like, "You, I'll give you $200 if you eat this whole bag of onions," and I knew it was for real, I would do it. So I can't act like this isn't a worthwhile amount of money. I will set a limit order to close at 244 so I can walk out with 2 Benjamins. This is a big W. Alright, so this is some bullshit. I got greedy over a couple dollars and didn't get a fill at 244. And look where Dragon Ball is right now. 1 hour later, and this contract is down to $100. I'm dumping now and I'm taking my $62 profit so I can go buy a hibachi dinner and be mad about it. This is unbelievable. This big W becomes a small W. Alright, life goes on. It's March 10th and we've got another play going on here. That's EWI, the Italy ETF. I'm not really concerned about EWI's technicals. I'm interested in what coronavirus is doing to Italy fundamentally. I checked in with my cousins Vincenzo and Mama Rosa down in Naples, and they said the entire country is going into lockdown. No pasta, no gondola rides, and no cannoli. They're stuck inside, not spending money. And with summer right around the corner, I think Italian businesses are going to get crushed by a bad tourist season. The time to short the Western Roman Empire is now. EWI is about $22.70 right now. I'm going to buy a put about 12% out of the money at the $20 strike for $80. My expiration is a month out, and I'm expecting a continuous drop unless Mercury, god of shopkeepers and commerce, intervenes. Okay, 10 days have gone by, and perhaps I spoke too soon and Mercury took it as a challenge. But EWI did in fact drop real hard and fast, putting me at a solid profit right off the bat. But over the following week, EWI seems to have kind of bottomed and doesn't want to go any lower. I am up quite a bit on it, so I think I'll take the money and run before I get hit with another Deutsche Bank situation. I'm closing here at $200 to take my $120 gain. And now that I'm making this video, we can see that this was indeed a good close. I sold the put right here at the bottom. RIP to the guy who bought it from me, though we've all been there. This is in contrast to my Deutsche Bank exit, in which I should have iron-handsed it and held out for more downside. But between the two, I am walking away with a good profit. Of course, none of these gains offset the losses my shares would suffer over the following week. US Steel and Snap proceeded to get eviscerated through the mid-March meltdown. Although I did use in-the-money covered calls to ice the wound, both Snap and US Steel covered calls were assigned for a loss. I got scared and broke my own rules about selling covered calls below basis, and now I'm the fool. However, GameStop was the light of my portfolio. I guess everyone is sitting around turning food into shit while they play video games, and I'm actually still poaching premium from the wheel. GameStop was a big hit, so thanks to Eric Shusted for having suggested it a few weeks ago. After all that churning, my portfolio looked like this. My small bearish plays on EWI and Deutsche Bank were no match for the $100 loss on the SPY YOLO and the bone-crushing destruction to my underlying shares. I'm below where I started months ago, and it wasn't a YOLO that got me here. It was a market meltdown that wiped out more than 4 months of gains in 2 weeks. The strategy I've used over these past couple of weeks is called suckin' ass. I should have bared out harder during this major drop, and maybe that's my mistake, but the real problem was that I held onto toxic shares and tried to make up for it with risky FDs. The SA method does not work, as you can see here. And one more thing before we get into the big YOLO. You guys told me that I have to use all the money I get from free shares to YOLO on something, so let's do that now. Only one person this month used my Robinhood referral, so I'm a little upset about that. I was hoping for some more YOLO bucks. I've got all these pending ones, but I don't know if these are people who opened but never funded an account back in January or something. Anyway, we got a free share of Marathon Oil from one referral this month, so that's $6 I apparently need to YOLO. It might be tough to find something reasonable at that price, but let's buy a very distant out-of-the-money FD and spread some smog. I did a little bit of dicking around and decided that Sirius XM radio is my target. Although the technicals on Siri are actually pretty bullish and their recent earnings was pretty good, I'm going bear on this one, and I make that choice for basically 2 reasons. 1, Siri is just the first stock that I thought of, and 2, we've got a bearish reversal pattern on the candlesticks, where Siri failed a few times to break $6, showing me that we've got some immediate term resistance. As far as I understand, this is the correct way to YOLO. Just pick a random stock, do no more than 10 to 15 seconds of analysis, and that's exactly what I'm doing here. So let's get at it. It's Thursday, April 30th, and May 1st expiration is just too close. So let's flip to puts for next week, May 8th. Like I said, I think $6 is a short-term ceiling, but I can't afford the $6 strike with my oil money, so I will instead buy the $5.50 put. Robinhood is marking this at $4, but I know that's a lie because Robinhood price gouges, so instead I will put in the order for $5. And there we go. Let's see if I can turn this $5 into 50 and then that 50 into 500. It's Monday, May 4th, and Siri is actually getting hit pretty hard, and one more bad day will send my put in the money. I'm up 80% right now, down from a peak of 120%, but unfortunately that only translates to a few dollars since my initial investment was so low. I wish I had put in more up front, but if tomorrow Siri goes down another 17 cents like it did today, I'll realistically be looking at a good 400% gain. That would only be $20, but that's enough to YOLO on a new play and see how this thing goes. 5 straight plays like that, and I'd be at over 15 grand. I don't think it's gonna happen, but you never know. And it's gone. Siri did drop, so at least my technical analysis was on point in the immediate term. Doesn't do shit for my portfolio though. I was up about $6 at one point, which at the rate I'm driving would have been like 3 weeks worth of free gasoline. But Siri hung out above that $5.50 strike, and ultimately that FD expired worthless. I think I'll have to implement a new rule in the future. Close FDs at 100% gain if the strike is still out of the money. If it's in the money, you might be okay to iron hand it, but if it's still out of the money, just take the money and run. This was a lesson learned, and even though I did lose on this FD, it was kind of fun. I enjoyed that, and I'll give it another shot next time. But enough of that small stuff. I promised you guys a YOLO, and I'm not talking about $100 of Robinhood's money. It's March 23rd, and I've watched helplessly as the market has free fallen from its highs back to 2016 prices. It is a bloodbath out there for both the market and the economy. Here's the trending depiction of the jobless claims numbers, for example, in case you haven't seen the meme yet. Things are only going to get worse, and I'm ready to get in on this action, so it's time to buy some puts. SPY is having another garbage open today at around 225 a few minutes into trading. Looking at this collapse of the American way of life, I want to use this small account to buy 3 at-the-money puts on SPY. Let's open the chain to May 1st to give America some more time to burn. And now I want to buy 3 SPY puts at the 226 strike, but they're going for almost $1,800 each. This account doesn't have enough money to spend almost $5,400 on puts, so check out how I'm going to get around this. I'm going to queue up this 226 put, and then I'm going to flip over to sell puts and go down here out of the money to 215. I'm looking to sell FD puts in order to raise money so that I can afford these at-the-money puts. Whereas buying 3 at-the-money puts would have cost me something like $5,400, which this account cannot afford, I was able to raise about $4,160 by selling these FD puts. Buying 3 at-the-money puts is therefore only going to cost me about $1,200 out of my own pocket. That's less than the cost of 1 put on its own. Technically, this is a put-debit spread, but for how I'm using it, I'm really just selling FDs so that I have enough money to buy a handful of at-the-money puts with a much higher delta. Let's lock this in on March 23rd. Remember this as the day Mikey Millions joined Bear Gang. However, I do caution that when someone faded to the core like me is jumping fence to Bear Gang, we're probably pretty close to market bottom. Let's see how this goes. Now, a few days have gone by since that purchase, and a couple things have happened. 1, the US broke another record for most jobless claims ever, topping 10 million losses in 2 weeks, which later became 30 million, wiping out all job growth since the Great Recession. 2, the IMF and Bloomberg Economics declared that we will absolutely see a massive global recession, with the US clocking in at 4.8% contraction in Q1. And 3, March retail sales dropped 7.8%. Coupled with New York regional manufacturing dropping almost 80%, this more or less means that we're back to the hunter-gathering era. Oh, and by the way, number 4, we're knocking on 70,000 deaths and 1.2 million infected with COVID-19. Can't forget about the pandemic. You would think all of this would have the market reeling, and it does. The market is reeling back up. When I did my DD and figured a global meltdown and pandemic would be bad for stocks, there was something I hadn't taken into consideration, and that was government intervention. I did not expect our capitalist society to bail out failing companies, again, and print money 24 hours a day. We've got mismanaged corporations that have $0 saved for a rainy day crawling to taxpayers for a forgivable loan, or in common language, bailout. And they're going to get it. But I can't say much because I'm just one of those unpatriotic bears who bet against America. And for my treacherous trading, my puts got rocked. Within a week, I lost all my gains and almost $700 off my principal value. And it didn't stop. The market has been so excited about government intervention in our crumbling economy that SPY is rapidly closing in on $300. That figure is just a few strikes above my 226 put, so things are not looking good. April 13th, with just over 2 weeks until expiration, SPY is over 274, and I'm about one global famine away from my 226 strike getting hit. Whenever the next horseman wants to come through, I'll be ready. In the meantime, look at this account. I'm suffering a 50% haircut, and it would be so much worse if I didn't sell FD puts to raise money for my long puts. I'd be pretty close to $0 without that. Basically, the bulls have kicked my ass, and I'm a dying bear, bleeding out on the steps of the Federal Reserve. My account looks similar to the bear gang members who made a ton of money in the crash and then lost it all on the subsequent rise. But since I was late to the party, I just skipped this whole part and went straight to this part. I'm going to close 2 of these contracts at like 85% loss, and then keep the last one open so I can see what Diamond Hands feels like. I think it's time for me to return to my dumpster and eat leftover ramen with ketchup packets like the other bears. What a messy way to end the season. Down 40% all time, down 50% from the peak, and I'd be down close to 100% all time if I just bought my own puts instead of gambling someone else's cash. But nonetheless, this is real money that I lost here, so this sucks. So what now? After a long, arduous march up the mountain, my dying account bleeds at Jpow's feet. Season 1 of the Robinhood 3K Challenge ends with a gun pointed at our heads. But this is not the end of the 3K Challenge. Season 2 will be back in the summer, this time stronger, more aggressive, and ready to kill. Thanks for throwing your support behind me during Season 1. Don't give up on me yet. Soon, I will release my off-season activities that will carry this crippled portfolio back to $3,000. And then, we will fly into Season 2 with the wind on our backs. Thanks for watching, everyone. I'll catch you next season.